year is 1965. Lyndon B. Johnson signs into effect Medicare. Oddly, though, and I got Tim Mickelson, Medicare specialist here. He's a Medicare agent. He's been in the insurance industry since 2001. I just have a quick question on this. Is it a coincidence that Lyndon B. Johnson signed this into effect just years before his retirement? I mean, did he just want the good American people to be paying for his health insurance, the biggest expense in retirement? I mean, is there a coincidence there?
I never thought of it. It does sound suspicious, though.
I think it's more than specific. We're going to have our experts look into that, but this is Your Life Simplified, brought to you by Mariner Wealth Advisors. My name is MacKelvie. I'm a certified financial planner. I'm joined today again by Tim Mickelson. We are going to talk the ABCs of Medicare. Tim, how you doing?
I'm doing great. Thanks for having me.
I think a lot of our listeners and probably several of our clients are just curious, okay, how does Medicare in general work? They've heard of it. They understand it's some type of insurance, but maybe just walk us through kind of the ABCs of Medicare, if you will, how it works and what we should know.
Right. And it is the alphabet soup, right? A, B, C, and D. A and B is really what we had from 1965 until about 2006. And in 2006, along with the Deficit Reduction Act, they came out with the prescription drug plan, which is what we call Part D. And they also formalized the Part C plans, which are called the Medicare Advantage plans.
Okay. In those Advantage plans, would you say that they cause the most questions for people?
Oh, yeah, for sure. The sort of the baseline plan for so many years was the Medicare supplement plan. So you had A and B, which would provide roughly 80% of your coverages. And then a Medicare supplement could step in and cover a portion of what that 20% would be or cover it all. And with the introduction of the Medicare Advantage plans, those were standalone health plans that were offered by private health insurance companies, still are. And they were basically what people refer to as having A and B and D kind of all wrapped up into one package.
Okay. And I guess that may be, speaking of alphabet soup, I mean, there quite literally is letters associated with Medicare. So it's a very real comparison here. So Part A, help us understand, like, what is Part A? What is Part B? And what do Americans get for free? What do they pay for? Again, how does this work? Maybe if we're to get a little bit more granular here.
Right. So when you're needing Medicare insurance, and usually that's at age 65, or if it's after that, when a person retires from their employer. And at that point, you need to have A and B. Now, you're not required to have it, but all of us will get it because it's the best deal going. Medicare Part A for most of us is going to be $0. It won't cost us anything, but it does have a cost. So for individuals who haven't earned those 40 quarters of, basically Social Security taxes that they've paid over their working years, if you haven't earned that, maybe you moved here recently, or maybe you worked under the table your whole life. In that situation, you could be paying $499 per month for Part A. So just keep in mind that most of us, that's not an issue. We're not going to pay anything for Part A, and that's the hospital coverage. The medical coverage, Part B, everybody has to pay for that. And at a base level, if a couple is under a certain amount of income, which is most of us, we're going to pay $164.90 per month for that piece of Medicare. And the two together, that really creates a health insurance plan minus drug coverage.
Yeah, which is that Part D, easy one to remember because the first letter there, D for drugs, if you will. But so it sounds like A and B are pretty much a part of everyone's Medicare plan. And part of this is going to be based on not only the years that you paid into Social Security, but also your income. What are just typical costs that maybe clients can expect, or just let's just say people in general can expect for Medicare insurance before we get into the Advantage plans? What are just typical costs that somebody can expect?
Right. And there's really two different ways to go with your Medicare. One is to use that Medicare A and B as your primary insurance. And if that's the case, then it really is highly recommended that a person add a Medicare supplement. And then also, because Medicare supplements don't have drug coverage, you add a standalone prescription drug plan. Now, for somebody who's dealing with a lot of health issues, that's probably the best way to go. And you could be looking at, say, that $164.90 per month for your Part B, and then maybe another $250 a month for the addition of the supplement and the prescription drug plan. Okay. The other option is to go with the Medicare Advantage plan, which would it doesn't replace your Medicare, but it is a product you would use instead of your Medicare. And in that situation, your premiums could actually be as low as $0 per month. You still have to pay that Part B premium. You have to have A and B, but you could have $0 additional dollars coming out of your pocket. And of course, these plans do vary. It can be as high as $100 or more, but most of those plans that people are getting, at least in the Seattle area, are going to be as low as $0 a month.
Yeah. And is that regional? Because obviously we have nationwide clients. Would you say that cost is very much regional and you can see different costs across the board?
Yeah. And Medicare Advantage plans are not in every county. They tend to be more available in urban areas or more highly populated areas that have a lot of hospitals and population. So in those situations, you're likely to find zero premium plans. When you get out into more rural areas, you may not have any Advantage plans available to you, or you may be limited on how many ones that you can get.
Okay. And I guess, how does it work just functionally? Like somebody is maybe approaching the 65-year-old age, but I think, again, you take a few steps in anything, you find complexity. So somebody's approaching 65. How do they go about signing up for this? So how do they begin this process, and when do they begin that process? And the last question I'll add in there, I got a 3-part question. How do they begin it, right? Do they reach out to an agent? Does that cost them more? I guess, how does it all work?
Yeah, the good thing about working with an agent is that there's never a commission that you would have to pay for that individual.
That was surprising to me.
Yeah.
So there's no added cost essentially to the plan.
Correct. Right. So, you can call the companies direct. That means that you're kind of shopping it out yourself because you're calling every company individually. But having a good agent who does represent multiple plans allows you to get that information. Now, if you don't agree with the information they provide, you're not obligated to work with them. But if they do provide you with good information and they help you sign up for the plan, they would receive a commission. And there would, of course, like I said, no charge to you, whether you go direct to the carrier or you go through a broker.
Yeah, I think that's important to highlight. So somebody's nearing 65. How do they begin this? Do they just say, okay, I feel like I'm getting close to 65, I should call an agent? Or is there, certain, I think 120 or 90 day, phase there where they should, after they turn 65 or 6 months before they turn 65, they start, filling out some forms? Just maybe walk through the steps to begin this process for somebody who is, considering getting on Medicare, because again, they're just coming close to that 65-year-old line in the sand. Sure.
And we're all thinking about it as we approach age 65. Of course, our friends are talking about it. We're seeing the commercials on TV. So, the way it works is if you are collecting a Social Security payment as you approach age 65, you will receive your Medicare card automatically 3 months prior to the first of your 65th birth month. Okay, so the month that you turn 65.
And that still comes in the mail.
And it comes
digital, unlike some Social Security pieces. Okay.
Right. And it comes in the mail and it is paper. So a lot of people have, of course, as they're getting all this different mail from the insurance companies and from other brokers and salespeople, they may confuse it and throw it in the garbage. So it's happened. So be careful, keep an eye out for that about 3 months prior to your birth month. Now, if you're not collecting Social Security, you will not be signed up for Medicare. It is something that you have to make that decision. And basically the government has says, well, we have to assume that maybe you're still working, you still have coverage through an employer, so we're not going to send you your card since you're not collecting Social Security. So if it is something that you do want to move on to, you're going to want to go on to the Social Security website, ssa.gov. And it's pretty easy to navigate it. There's a Medicare link at the very top. You click on apply for Medicare, and you can go through that process. Now, if a person is still working or they have a spouse's employer coverage, they don't actually need to sign up for Medicare at that time. One of the things that they could do, though, is they could go on and sign up for Medicare Part A. Once again, we talked about how that's $0, doesn't cost them anything. So they could have that extra coverage while they wait, get to that point where they retire and lose that employer coverage. And then at that point, sign up for Part B.
Okay. And how does somebody know if they should stay on their current employer insurance? Because a lot of people are working past 65. How do they know if they should stay on their employer insurance versus Medicare? And what's maybe the breakdown of that? Is it like, 90% of the time it makes sense to just stay on your employer's health insurance plan? Here's how you tell. Or is it, no, Medicare is considerably better. Here's why. Maybe help somebody who's trying to figure out, do I go into Medicare or do I continue to use my employer's insurance?
Correct. Yeah. So, with employers that have 20 or more employees, it's usually best just to stay on that employer plan, use that employer plan until you're ready to retire. For individuals that are with companies of 20 or under 20 employees, Social Security does recommend that you sign up for Medicare. And, you have to kind of compare that. If the company is less than 20, then the Medicare is going to be the primary insurer. That is, if you keep both plans. And if it's over 20 employees, the employer plan will be the primary coverage, and then Medicare would be secondary. And I don't necessarily recommend that you have both.
Right.
Usually, the Medicare's plans are so good that you really don't need to have both coverages.
We've been paying taxes to pay for this benefit. So quite often it's the case that it's better. So who then, obviously there's that age date, but who also just qualifies for this? Is it entirely, from a Social Security standpoint, like you've worked long enough, you've earned the credits, so now you qualify? Does everybody qualify for this? How does that work from just a qualification stance?
Right. If you're a United States citizen, if you're a resident of this country, you are eligible for it. But like I said, if you haven't paid into the Social Security taxes or the Medicare taxes, you could find yourself paying a higher amount for Medicare Part A. Mm-hmm. But yeah, everyone 65 or older will be eligible for Medicare. And then there are folks that go on disability at a younger age. And there's other circumstances too, but generally somebody who goes on disability will automatically be put on to Medicare in the 25th month of disability. So that's where it's really, I feel bad for those folks because they're not hearing all that information about someone turning 65. Mm-hmm. You just don't realize that all of a sudden one day the Medicare card shows up and then you're kind of going, well, what do I do with this?
What do I do? Yeah. But that's why they reach out to someone like yourself.
Yeah.
And again, important. I think highlighting again that there's no added cost to that. Now, obviously you could sit down with an agent. I think this is worth mentioning, and they could pull out 15 Advantage plans. And you might be wondering, okay, is there a conflict of interest here? So it's worth doing your due diligence anytime you're sitting down with somebody. But just to break it down, we got Part A, and Part A is hospital coverage.
Hospital coverage, yeah.
Part B, which is primary care. We got Part C, that's the Advantage.
Right.
Where everybody seems to have a ton of questions. You're probably going to get a ton of mail on different Advantage plans. And then Part D, which is drugs. Easy one to remember, prescription drugs. With that, last thing I'll just ask on that to wrap up here, what's the typical cost of that? And when do you see that makes sense? Does it even make sense for people to potentially sign up for, even if they don't have current prescriptions?
Yeah, with the prescription drug plan, like I said, that just started back in 2006. But one of the things that they added to that was that if you don't sign up for a Part D plan when you first become eligible, you will accrue late enrollment penalties. Now, of course, if you don't have a Part D plan and you're accruing the late enrollment penalties, you don't actually pay those penalties. But let's say 5 years down the road, you end up having some expensive medications, well, we can absolutely get you signed up for a Part D plan. There's no underwriting. They don't look at your health or determine whether they're going to accept you or not. It's a guaranteed issue.
Yeah. Does anybody ever get denied coverage?
Never.
Okay.
Yeah, never for Part C Advantage plans and Part D plans. Those are a guaranteed issue. You can never be denied. But if it's been 5 years, you could add a 60% penalty to your monthly premium. Going forward, and that would be for the rest of your life. So I always encourage people to, if they don't have that employer plan, to absolutely sign up for Part D as well.
Yeah. And as you can see, pretty quickly here, there's complexity. There's some decisions to make. Again, all the reason to speak with somebody, speak with an agent, get an understanding of not only the different options, but what you should do, because there's no added cost. And
correct.
Why wouldn't you? I've always thought that's really funny too, just to, comment on that. I've always thought it's quite interesting how, there are commissions obviously that are there for the insurance agent, but there's no difference in cost because the government needs agents to explain this to people. Otherwise, people wouldn't do the right thing. They wouldn't sign up for it. So I think that's a good way maybe to fish out. So Tim, thank you for joining us.
Yes.
Again, if you're listening to this on Apple, YouTube, Spotify, wherever you might be listening, make sure to hit that subscribe button. Hopefully you found this helpful. Again, we're going to have another episode from Tim here on costs of Medicare and getting the most value out of your Medicare. So make sure to check that one out. Hope to see you soon.
Mariner Wealth Advisors, or MWA, is an SEC-registered investment advisor with its principal place of business in the state of Kansas. Registration of an investment advisor does not imply a certain level of skill or training. MWA is in compliance with the current notice filing requirements imposed upon registered investment advisors by those states in which MWA maintains clients. MWA may only transact business in those states in which it is notice filed or qualifies for an exemption or exclusion from notice filing requirements. Any subsequent direct communication by MWA with a prospective client shall be conducted by a representative that is either registered or qualifies for an exemption or exclusion from registration in the state where the prospective client resides. For additional information about MWA, including fees and services, please contact MWA or refer to the Investment Advisor Public Disclosure website at www.advisorinfo.sec.gov. Please read the disclosure statement carefully before you invest or send money. The views expressed in this podcast is for educational purposes only and do not take into account any individual personal, financial, legal, or tax considerations. As such, the information contained herein is not intended to be personal, legal, investment, or tax advice. Nothing herein should be relied upon as such, and there is no guarantee that any claims made will come to pass. The opinions are based on information and sources of information deemed to be reliable, but Mariner Wealth Advisors does not warrant the accuracy of the information. The guest today is not affiliated with Mariner Wealth Advisors, and their opinions expressed are their own. Certified Financial Planner, trademark, CFP, registered trademark, and federally registered CFP with flame design marks, collectively the CFP registered marks, are professional certification marks granted in the United States by Certified Financial Planner Board of Standards, Inc., also CFP Board. The CFP, registered trademark, certification is a voluntary certification. No federal or state law or regulation requires financial planners to hold the CFP certification.